Welcome back to the channel, everyone. Yet again, the media is spreading FUD, fear, uncertainty and doubt. Today I've got two articles that I want to run through with you, and then I also want to recap on the short interest data, some dark pool data and more. So stay tuned and let's make some money. But guys, before I get started, please be sure to drop a like down below and subscribe to the channel if you haven't already, so that you don't miss another video just like this one. So guys, I want to dive straight in with the key information. So, this article here from MarketWatch says that meme-based investing is a totally nihilistic parody of actual investing, says Jeremy Grantham, who called 3 stock market bubbles. I don't actually know what the word nihilistic meant, so I had to Google it, and it's rejecting all religious and moral principles in the belief that life is meaningless. Basically, he's saying that just investing in meme stocks is completely ridiculous. The article goes on to say that that's Jeremy Grantham, co-founder and chief investment strategist at Boston-based money manager Grantham, Mayo, Van Otterloo & Co., in a recent interview with Bloomberg News, lamenting the state of an investment world that has prominently featured the emergence of meme-linked trading in stocks like GameStop, AMC and BlackBerry, and then coincidentally shows the single-day returns for GameStop, AMC and BlackBerry, which is down, rather than showing the last 6-month returns, which are much bigger. It says that Grantham is worth paying attention to due to his prescient calls over the years. He said that stocks were overvalued in 2000 and again in 2007, anticipating subsequent market downturns. Clearly the hedgies and the institutions and the big funds are trying to scare us away from investing in AMC and basically holding the line. Obviously, I think that showing some kind of guy that's predicted previous recessions and downturns will try and sway our decision, but the apes hold strong. But that's not the only article of FUD I've got for you today. Another one here from Yahoo Finance says, forget AMC and GameStop, 10 new stocks Reddit Wall Street Bets is buying. I think obviously, again, the hedgies and the big funds and the institutions are trying to distract people from investing in AMC and trying to spread our numbers far and wide. But guys, it's never going to work because the apes are strong together. This is something the big guys have been trying to do for months, which is spread us apart. But obviously, it's not working. I think they're trying to spread us apart because the hedgies are running out of ammunition to add to their short positions. If you check out my video from yesterday, you'll see that the short interest has been declining week over week over week. And that's something I'm also going to touch on today. And you'll see, guys, that it's getting even worse for the hedgies. If we have a look at the dark pool data for AMC, again on StockGrid, and we scroll down and have a look at the net short volume, you can see that every single day for the last few weeks, the hedgies' net short volume has been declining. And the last 2 days, we've seen drastically less short volume than we've seen the last few weeks. This obviously shows that the hedgies are running out of ammunition to add to their short positions. They're currently near a $30 billion net short position, and they're just running out of fuel, guys. I think that we're very, very close to a tipping point. I mean, you can see plain in sight that they are running out of volume. When they can't short the stock anymore, it's just going to be us apes buying more of the stock, and therefore the AMC price is bound to go higher. If we have a look at the short interest data from Ortex, we can see that the estimated short interest increased slightly between Tuesday and Wednesday from 70 million shares to 72 million shares. Ortex also tweeted because the exchange reported short interest data had been released. That data showed that the actual short interest was larger than expected because the shares that had been returned weren't shares that had been shorted, they were just shares that had been on loan. So obviously the hedgies are trying to hold on to as much of their shorted shares as they can. But guys, I don't think that this is the right idea for the hedgies. As we can see, there's 48,000 calls that are expiring in the money and an additional 70,000 calls that are very, very close to expiring in the money. The last few days, we have seen that AMC stock hit and go past $60. And therefore, even though the stock is only at $56 at the moment, it could definitely exceed that $60 and those shares could be exercised. Having a look at the AMC stock chart on a wider scale, yesterday we obviously saw the stock trade fairly flat, but we are getting ever closer to closing this pendant or this flag, at what point there is going to be an inflection and a big decision made at either the top or the bottom of this flag, and the stock will either break out upwards all the way to new highs or potentially break down. But I think considering that the hedgies are running out of shorts and they can't add to their short position much more, I think we're going to break upwards out of this pendant and continue on to new highs. Guys, if you want to pick up some shares in AMC, but you haven't yet invested, be sure to check out the links in the description down below to Webull, where you can get 2 free shares worth up to $1,850 if you're in the US, or to free trade where you could get a free share worth up to £200 if you're in the UK or in Europe. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!